Hey everybody, welcome to the channel. Last week we looked at the luxury home builder Toll Brothers. This week we'll look at another home builder, this time PulteGroup, ticker PHM, which is a more of a diverse home builder focusing on starter homes, move ups, and what they call active adults. This is a stock I've owned. So, first we'll look at my previous purchase prices and how they done. Then we'll move into the stock valuation. And at the end, we'll go into the machine modeling to forecast the 52-week stock outlook. So, let's jump right into it. So looking at my previous purchases, I first bought in May of 2022 at a price around $42.50. And since then, this stock has had a nice run. I'm up about 90%. And then early this year, I bought in again in March at a price $53.68. And that is up 50%. So since I've owned this stock has had a nice run. We looked at Toll Brothers last week. Toll Brothers, very similar. Builders, home builders overall have had a nice run. But for this, if I would put my money in S&P during these days, I would be up just over 8% and just under 12%. So PultiGroup has worked out very well for me, especially compared to the S&P. And then if I take into account dividends, I'm up just under 82%. And same thing, S&P, I would be up just over 10%. Down here, you can see my investments. So my initial investments or my base price overall, it's about $9,000. And with this growth, it's up to 16,500. So this stock has had a nice performance. And back then in 2022, when I first bought in, I think I was valuing the stock at around $55 to $60. But we'll get into the current valuation right now. So we're going to jump over and focus on that. So looking at Pulte's financials, first thing, revenue. Nicely increasing for the past 10 years with no down years. Net income, a little mix here. They had 3 down years. And if we look here back in 2013, it was 2,620,000,000. And this past year, 2,617,000,000. So that just leads me to believe that back in 2013, coming out of the financial crisis, this is a outlier. Earnings per share, pretty much steadily increasing, 2 down years, but past 5 years, it's been increasing. And two of my big ones I like to look at, dividends. I like to see that steadily increasing. So going from 15 cents to 61 cents. And then shares, steadily decreasing, going from 387 to 236. So these are the two data points I really like to see. Book value, increasing for the past 10 years with 1 down year. Uh, Probably the biggest mix out of all these is free cash flow. You can see they had 5 down years, and even back in 2015, it was negative. So a little concerning here, but still, I liked these metrics overall. And one other one I like to look at is return on equity. So the industry average is about 30% for home builders. So we can see they were at 32 last year, about just under 28, and then just over 23. So would like to see these picked up. So hopefully moving forward, they can stay closer to this 30%. And let's go down a little further to look at some of this on a graph. So here we go. Revenue per share, up and to the right. This is what I like to see, is these data points going up and to the right. Book value per share, the one in red. Revenue per share is the one in white. And then we got earnings per share in green, nicely going steadily up and to the right. Right here, this is percentage for return on equity. So we already discussed maybe about 5 to 10 years ago, not doing so well, but over the past couple of years, it's been nicely growing, getting to that 30% industry average. So when I look this out on the graph, these are going in the direction I like to see. So let's jump down to the actual valuation now. So you can see here, based on those financials, I'm valuing the stock at around $80 and using a margin of safety of 90%, which tells me that they don't have a lot of liabilities. I'm valuing it at $71.50. I did value this previously a couple months ago, and I actually increased that margin of safety to 85%. So let me do that here so we can actually look at it with the 85% margin of safety to be a little more conservative. with a margin of safety at 85%. We can see the intrinsic value drops to $67.52. One thing I will point out too, the net income CAGR for the past 10 years, it's actually been flat. And we looked at that a few minutes ago, where back in 2013, it was very high. So it was probably an outlier coming out of the financial crisis. So what I'm using is a 11% short-term growth rate. And that's because these are home builders and it is a hot market. It's also a cyclical market, but we know there's limited inventory, and as long as people are willing to pay these interest rates, yes, they've been ticking up, but their last quarter for Pulte, it was one of their best quarters, if not their best quarter. So it seems like it's still a hot market. So as long as they can keep that up, I do have slight concerns, but I am going to use 11% growth rate, giving me this valuation at $67. I think the stock is currently trading in the $80 range, so it is slightly overpriced at the moment, but I'm still holding on. So with that, let's jump over to the machine modeling and forecasting and try to predict what the stock price is going to be in 52 weeks. One other thing to look at before getting into the computer modeling is a few other metrics. So down here, see this growth grade I have as an A, and that's because of these metrics right here: return on invested capital, book value, earnings per share, sales. All these have 10% growths for year over year, past 5 years, past 3 years, past 10 years. This is a great sign, gives me a lot of confidence in a company. Free cash flow was a little mixed, as we saw a few minutes ago, but still, everything else very well. Long-term debt to free cash flow, however, rather high for me. Approaching 5. I like to see 3 or under. But dividends, as we mentioned, steadily growing, 300%. Shares have declined almost 40%, and net profit for past 10 and 3 years, over 10%. Last 3 years 14, and last 10 years 13. So a lot of great data points. So this gave me a lot of confidence in PultiGroup, looking at all these metrics and data points overall. Yeah, one or two questionable ones like free cash flow, but still everything else very positive with a great outlook. So now let's get into the modeling and forecasting for the next 52 weeks. Here in the week of software, I already ran the modeling to save some time. And this far right column is the stock price for PulteGroup. And we can see here on September 5th, it closed at 79.21. And just looking back the past couple of weeks, we can see it got as high as almost $85, which I believe would be its all-time high. But going down is the forecasting. And if we go out 52 weeks out to September 3rd of next year, it's actually projecting a $9,900 price value. This is using the M5 rule, which is typically optimistic. So this is actually pretty optimistic, probably in that 20-25% range for the stock to go up. And if we jump over the random forest, which is usually a little more bearish, and same thing, looking out 52 weeks to September 3rd of next year, it's actually looking at a drop to just under $57. So what I like to do is take these two methods and average them out. So I'm going to copy this data, move it over into Excel, and then we can graph it and look at it there. It's a little easier. So let's jump over to Excel. Back over in Excel, I already pasted the results for the two methods, the M5 and random forest. And as we saw, M5 rule was almost $100 projection in 52 weeks, and the random forest was just under $57. So let's take this, and now we're going to graph it to look at it a little easier. Here we are looking at the graph for the M5 rule. So the vertical red line just represents September 5th, and the blue line is the stock price movement. So everything to the left of the red line is the historical stock price. Everything to the right is the forecasted. And the orange line is just a percent change for the forecasted price. And we can see here what the modeling is showing is just a slight increase in the coming weeks for PultiGroup, and then a steep decline, dropping almost 50 to 60%. And then a strong recovery going up almost 20-30% from where we are today. And this drop looks like it's going to start or projected to start at the end of 2023 and go into first to the beginning of second quarter of 2024, with the recovery starting in the April-May time period. And this looks like it's similar to the past couple of years. Starting with COVID here, we can see there was a big drop, going from high 40s, maybe $50 down to 20. So dropping about 50-60% here, and then having a nice run up to, looks like, April of 2021, hitting just over $60, and then dropping down to, looks like, mid 40s. So that's probably about a 15% drop. And then they had a nice run up again to, looks like, the high 50s, and then dropping down to, looks like, the mid 30s. So this stock has seen this movement. Home builders is a cyclical industry. So potentially, if the Fed keeps raising interest rates here, we could see a big decline in the housing market and purchasing of new homes. But let's move over and take a look at the random forest method, and then we'll take the average and compare it to the S&P 500. Here we are for the random forest graph now, and we can see random forest is just showing a strong decline over the next year, with really just one minor rally here, and same thing, that April-May time period of next year, but still declining, with a total decline in that 20% range over the next year. So slightly different than what we saw with the M5 rule, which showed a recovery towards the end of next year. So let's take the average of the two. It's what I really like to look at to hopefully get a better idea of this stock price movement for the next 52 weeks. With the average of the two methods taking into account, we can see here, kind of similar to the M5 rule, where it's going to have a slight increase and then a drop. So not as much of a drop as we saw with the M5 rule, as this is taking into account random forest. So it's showing a drop in the 35% range, and then again a strong recovery towards the Q3 of next year, end of Q2 of next year. So if this does happen right here, this drop, this would be a perfect time to buy back into PultiGroup. Similar to when I purchased last year, and earlier this year during this drop or decline at that time period. So, I can think about selling now with the expectation that it will drop as shown here, and then buying back in. So something I will take into account. And let's just look at the average for the S&P 500 to compare. The S&P 500 is included in the graph now here in yellow, and I did change the graph to a log scale just to make it a little easier to see between the two price movements between the S&P 500 and PultiGroup. The green line is the percent change for the S&P 500, and what we're seeing here is a flat to a slight decline for the S&P 500 over the next 52 weeks, with the decline in the -4 to -5% range. Now, compare that with PultiGroup, which is expected to have a significant decline starting at the end of 2023 and going into 2024. If that does happen and there's that big price drop for PultiGroup, that would be the perfect time to buy, because it's supposed to recover back to about the current trading price in the high $70 to $80 range. And if this does happen, and we can buy out here in this April time period of 2023, and it makes that strong recovery, greatly outperform the S&P 500. And this is similar to what I did when I first purchased into PultiGroup back in, I believe it was March, April of 2022, which has grown almost 90%. And even earlier this year when I bought in March, and I think that's up about 50%. So buying this stock at the right price on those big declines has a strong payoff if you can hold on for a couple months, maybe up to a year. So one thing I am going to consider is possibly selling at the moment if I really feel that this stock does have a strong indication that it will drop. Interest rates start ticking up a little bit higher. That could impact the housing market and buying new homes. So something I will consider, and then buying back in with that decline end of this year and into early next year. So I think it's a very strong possibility. We can see something similar to this for PulteGroup and having a nice return if that does happen and you buy at the right time during that dip. So hope you found this video interesting and useful, and I'll see you next time.